Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KELLANOVA quarterly report. KELLANOVA offers a diverse range of products under various brand names. The company's primary business includes snacks, crackers, savory snacks, toaster pastries, cereal bars, granola bars, and bites convenience foods. Ready-to-eat cereals, frozen waffles, veggie foods, and noodles. Crisps. The company sells its products through various channels, including direct sales forces to retailers, brokers, distributors. Some of the notable brand names under KELLANOVA include Kellogg's, Cheez-It, Pringles, Austin RXBAR, Eggo, Morningstar Farms, Bisco Club, Lux, Menudo, Special K, Toasteds, Townhouse, Zesta. These products are sold in various regions, including North America, Europe, Latin America, the Asia Pacific, the Middle East, Australia, and Africa. And KELLANOVA's stock price increase. A multifaceted story, the recent surge in KELLANOVA's stock price can be attributed to several key factors. The acquisition by Mars, Inc. for $83.50 per share has been a significant driver of this increase, with the deal valued at approximately $35.9 billion and expected to close in 2025. Additionally, the company's robust financial performance, including net sales exceeding $13 billion in 2023, has contributed to investor confidence. Analyst revisions and upgrades have also played a crucial role, with several firms revising their outlooks on KELLANOVA following the acquisition announcement and strong financial outcomes. These positive developments have led to substantial increases in the company's stock price, with reports indicating a remarkable 60.97% increase over the year leading up to October 15, 2024. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by a combination of factors, including volume growth in key regions such as Africa and North America, favorable foreign currency translation, and organic net sales increases in various segments. Specifically, the company has seen significant growth in its noodles business, cereal volumes, and price realization in the noodles and other segment. On the other hand, revenue decline is primarily driven by category softness in key segments such as snacks and frozen in North America, unfavorable foreign currency translation, lower volume related to soft category demand, and lower net sales outside Africa. Additionally, mark-to-market impacts have also had a negative impact on revenue. Net income at KELLANOVA decreased by $57 million, or 15%, in 2025 compared to the previous year, resulting in a net income of $309 million. This decline is attributed to various factors, including a minus 14.9% decrease in year-to-date net income and a minus $63 million, minus 6.4% year-over-year decrease. Profit margins also experienced a downturn, with operating profit margin decreasing from 14.1% in 2024 to 13.9% in 2025, and net income margin declining from 11.4% to 10.3%. The gross margin decreased from 25% to 24.5%, while the operating margin dropped from 15% to 14.8%. However, adjusted net income increased by 3.2% year-over-year to $327 million in Q3 2025, and currency-neutral adjusted diluted EPS rose by 2.2% year-over-year to $0.93. Despite these positive trends, the company's free cash flow margin decreased from 66.7% to 44.1%. The expected gross margin improvements in late 2026 due to a restructuring project may help mitigate some of these losses. The company's financial documents present conflicting information about its operating cash flow. On one hand, page 18 states that operating cash flow was negative in 2025 compared to 2024. However, on page 64, it is reported that the company generated positive operating cash flow, with net cash provided by operating activities of $788 million and $1,293 million for the year-to-date period ended September 27, 2025, and prior year period respectively. This inconsistency raises questions about the accuracy of the financial documents. The company's debt level and interest expenses have undergone significant changes over the past year. While long-term debt decreased by $657 million, carrying value of foreign currency denominated debt increased from $1.2 billion to $0.7 billion. Net debt also saw a substantial decrease, although no specific amount was mentioned. Interest expenses have consistently decreased across various instances. A 23% reduction in interest expense was observed between 2024 and 2025, with consolidated interest expenses decreasing from $241 million to $186 million. Additionally, interest expenses dropped from $75 million in Q4 2024 to $60 million in Q3 2025. These changes indicate a notable shift in the company's financial landscape, with both debt levels and interest expenses experiencing significant fluctuations. Management is optimistic about the company's outlook despite some uncertainties. The sale of the subsidiary in Egypt has been completed, allowing for a focus on core business operations. To manage risks, the company will continue to use derivative financial and commodity contracts, master netting agreements, and reciprocal collateralization agreements. The company aims to provide investors with a meaningful comparison of net sales performance using non-GAAP measures. Management is committed to debt repayment, dividend distributions, acquisition opportunities, and share repurchases, while also prioritizing growth through business realignment and supply chain efficiency improvements. However, there are some uncertainties surrounding future growth rates and margins, as well as the potential disruption from the separation of WK Kellogg Co. The company will continue to monitor market risks, including volatile foreign exchange rates and hyperinflationary economic conditions, but is prepared to mitigate any resultant acceleration in inflation through productivity and revenue growth management strategies. Overall, management strategy focuses on managing risks, driving growth, and improving efficiency, while also being mindful of potential uncertainties that may impact the company's financial performance. The company has a history of paying dividends to its shareholders. In recent years, it has consistently paid out significant amounts, with $598 million in 2025 and $580 million in 2024. However, the company has not engaged in share buybacks during this period, indicating that it is prioritizing dividend payments over returning capital to shareholders through other means. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals concerns regarding inventory buildup and supply chain disruption. On one hand, the data indicates a significant increase in inventory levels by $15 million in 2025, compared to a decrease of $16 million in 2024, page 18. Additionally, inventories rose from $1,165 billion in 2024 to $1,199 billion in 2025, page 37. And a negative working capital of $1.6 billion as of September 27, 2025, page 63, may indicate inefficiency in managing inventory or cash flow. On the other hand, potential disruptions or inefficiencies in supply chain due to commodity and energy prices, transportation costs, labor costs, and geopolitical instability are also a concern, page 68. Moderate supply chain cost inflation, along with impacts from geopolitical instability and trade policies, may result in market disruptions and supply chain challenges, page 69. These concerns highlight the need for the company to reassess its inventory management and supply chain strategies. That concludes the financial summary for KELLANOVA. Feel free to comment below, and I will be happy to answer them when possible.